Hello, in this video I'm going to explain about what is the gaps and how the gaps are forming and what are all the strategy or what are the setups I'm using to trade the gap up and a gap down. So I recommend you to watch this video fully so that you can understand how to trade the gap up and a gap down with a more logical way. Let's understand what is the gap first. Gap is nothing but the difference between a current day open to the previous day close. So let me explain in this chart. I'm taking a Nifty 50 on a daily time frame. So let us go with August 10th here. The price closed at 17,534. On the very next day, on 11th of August, price opened at 17,711. So the difference between this close to this open is a gap. On the next day, 12th of August, price opened at 17,659 and the previous day close was 17,659. So there is a no gap. It was a flat open. On the very next day, on 16th of August, price opened at 17,797. From this close to this open, this is a gap. Let us understand why these gaps are forming in the chart, right? So there could be some logical reason for the gaps to form in the chart, right? So what are that logical reason? Let's go and see what is that. See, now I came to a 1 hour time frame on the Nifty same chart. So let us take a couple of days an example and see. I'll show you how the gaps are forming in the chart. So let's take between 10th and 11th of August. So there was a gap up, right? So what is the mean by gap up? So we are seeing a big gap in our chart, but what does that actually mean? Let me go to SGX chart. SGX is a nothing but the Nifty is our Nifty is trading in the Singapore market. That is what we called as a SGX Nifty. So on between 10th and 11th, so this red green line is a Indian market open time, and this red line is a Indian market close time. So this is a 10th open, this is a 10th close. So this is 11th open and this is 11th close. In between these gaps, the Nifty is traded in the SGX market, right? It trades almost 24 hours. So what happened in the overnight? On the overnight, the traders in the SGX Nifty were super bullish on the Nifty. So they bought from here to here, and which actually reflect here as a gap. So do not think the gap is forming based on some any imaginary myth reason. So there is a reason for the gap to form in our chart. So because of the traders are pushing the price up, that is reflecting in our chart. See, take this as an example from 11th and 12th. So this is 11th close and 11th hour market close, and this is 11th 12th hour market open. So in between, the price tried to go up but failed. The price tried to go down, again it failed, and it closed here, which means the price closed at the same point where it closed, and the very next day it opened at the same price level. So which actually shows there is a no gap up or a gap down on this day. So this is a flat opening, but here it was a gap up because of the overnight traders were pushed the price from this point to this point, and this is how the gaps are forming, and this is how the gap up and also the gap down also will form in the market. Now here comes the important thing, how to trade the trade. So here is your setup. So for the intraday, you can go to your 3 minutes or 5 minutes of whatever the instrument you are trading. And if you see there is a gap up or a gap down, you just wait for at least a few minutes. You wait for a swing to form. So what is a swing? Swing is nothing but you need a price to form something like this. Once it formed, start marking your swing high and your swing low. this is your swing high and your swing low. So once you mark those things and wait for your price to reach there, that could be a most of the time that is your current day high or a low. So wait for the price to reach there and observe for the reversal. It could be either a failed breakout or a breakout failure and it will reverse to the zone, or it will continuation happen. I'll be showing in the example in the coming few minutes. So I'll also explain about the entry, stop loss, and the targets. So the entry is always at very close to our the swing high or swing low by using a wholesale entry, a reversal candle, and the stop loss is just above or below to the entry candle. And your target is always aim for at least minimum 1 is to 2 risk reward ratio, or if the price moves in your momentum, you can utilize those momentum and you can book your profits at your neck swing highs and swing lows based on the conditions. So let me show you one example now. So this is the example of the gap up which happened here. So the previous day close was at this point and today open was here. So this is a complete gap up. So what is this gap? The gap up is nothing but there was an overnight position created by the traders. So they were on super bullish. So now price was open here. So what is our first condition? We need to wait for the first swing high and swing low to happen. So where is our swing high? At this point we have our swing high, and where is our swing low? That day low was a swing low. The price opened here and the price moved and failed. So the first swing low and high was formed. And what is our second condition? We'll wait for price to reach either a high or a low. At this point, price reached the high. After that, ask this question: if the buyers are more strong, they should push the price up above from here, isn't it? Because they already pushed up, which actually shows the buyers are more power. So if they are more strong, they should push the price up above to this range, right? But what happened at this point? They cannot able to push the price up. It was a reversal. So what reversal is it? So this is we called as a breakout failure setup. I'll give you the link above. If you don't know how to trade the breakout failure setup, you can watch it and you can utilize in your the gap ups and gap downs situations. And breakout failure setup will most of the time it will works very good at the gap up and gap down scenarios. So here the price tried to go above from the day high, but it was a complete failure, right? It reversed. So what is the next? So we qualified this as a BOF. Now we need to find our entry. Where is our entry? Entry is very close to this point. You put your limit order here at 17,833. And where is your stop loss? You can keep just above to this point is a stop loss, which keep a buffer. You can keep an SL above here. So you can go ahead and keep an SL above 17,845 is your stop loss, which means almost 15 points is your SL. And where is your next target? This could be your first target. This is your latest swing low, and the day low is your next target. After you're taking an entry, price started falling down with a good momentum, which actually shows the sellers are more in a control. So you can keep right till your day low gets takes out, or the day low gets reached. So finally price reached here. So exit all your position because you shorted this particular day when there was a gap up. You have to keep in your mind this is still in an uptrend, isn't it? So you exit all your position here and wait for the next opportunity. So what is the next opportunity? You just reverse this again. You look at this point, the price came down. If the sellers are more par, they should push the price down below, right? But no, there was an immediate reversal happen over this place, which actually shows that buyers are still in a control. And we apply our BOF trade setup here as well, and you can be able to go for a long here, keep an SL just below to this zone, and you can expect the price to reach your day high. Where is your new day high? This is your new day high. So you can expect price to reach above here. So on this day, you can make from this point to this point around 60 points on a down move, and from here you can make from this point to this point almost 60 points here by keeping an SL of 15 points. So where you can keep an SL below, here you can keep an SL just below to this day low, and you can take an entry at this area, and you can ride your trade at least till your day high. So these are the two trades where you can trade using a BOF setup on your gap up day, and I'll be showing you another example for the gap down. Here, I'll be showing you the example of how to trade in the gap down. Okay, so the conditions are same. So we'll take a 3 minute or 5 minute time frame, and we'll wait for a first swing high or a swing low, swing high and swing low to form, and we'll wait for the price to reach either a day high or a day low, and we'll observe for the BYF trade setup, and we can take an entry. Okay, this is an example for the gap down. Look at this. The yesterday price closed here and the today price opened this point. So what is our first condition? We'll wait for price to form a swing high and swing low. So where does it form? So at this area we have a swing low, and this is our swing high, right? At this was open and the price was not takes out till this point. So we mark this is our swing low and this is our swing high as of now. So we'll wait for the price to go down or the price to go up. So you can ask this question. There was already a gap down, isn't it? Which means the sellers are more in a control. If the sellers want to push the price down, they should go below like this, right? Then they are more strong. But what happened here? They cannot able to push the price down below to this day low or this swing low, right? Which actually forms a breakout failure, immediate reversal, isn't it? So we know how to trade the breakout failure. So it's already downtrend, but still the sellers are not able to push the price down, which actually gives a more confidence for us that sellers are not strong. They might get trapped, right? So we can enter a long at this candle, and we can keep SL below here. Let me mark it for your understanding. So let me mark the stop loss. This is your entry. This orange line is your entry, very close to your day low, and below to this point is your initial SL, and the first target is this your day high, right? Which means you have very small stop loss, somewhere close to some 15 points, or maximum you can go for a 20 points. And where is your target? Target is around 60 points, so which is almost 1:3. See, this is a gap down, but we still going for a long. Why? Because of the BOF setup, because of the gap down failure, right? So why this setup worked? Because if the price is open a gap down, most of the people are thinking that the price will fall further down. So after they are seeing the price got breakout, they might go for a short. But the question is, what if it reversed against them, and they are all got trapped, and the price moves in their favor, and you can exit from this point. So you can done for your day. One good trade will make your day happen, right? So this is how I trade using a gap down and a gap ups, and you can subscribe this channel for more such contents and my trading strategies in the setup, and I'll see you with the next video. Together we grow. Thank you.